Welcome to AB Cardano. AB Cardano is your guide to professional trading by providing free educational trading materials and strategies. Now, let's get to class.
Hello everyone. Today we are gonna talk about chapter 1 in the book, which is talking about chart types. The first question is, what is technical analysis? The answer is, technical analysis is the study of price and trend changes in commodities, stocks, futures, and various other market instruments. The second question is, how is the price evaluated? The answer is, the price changes are primarily evaluated by various indicators, oscillators, or trading systems to give a trader an edge in trading. The third question is technical analysis a perfect science? The answer is, technical analysis is not a perfect science by any means, but it does have certain characteristics, patterns, or indications, which may be repetitive or may be intuitive and tend to possess Zen-like predictability power. The fourth question is, how does the technical analyst use technical analysis? The answer is, technicians plot these prices and price changes on a chart and apply various indicators and studies to figure out potential supply and demand areas, trade setups, targets, and stops to win. Question number 5. How is the price plotted on a chart? Prices are plotted as line, bars, candles, etc. Question number 6. What is the X and Y on a chart? The answer is, the X-axis is the time and the Y-axis is the price. Question number 7. Where the indicators are plotted? The answer is, any indicators derived from the time and price values are either overlaid on the chart itself or plotted in secondary graphs below and above the main price time chart. How is the arithmetic scale plotted on a chart? The answer is, arithmetic charts have the same distance between prices. Question number 9. How is the log, semi-log charts plotted on a chart? The answer is, log or semi-log charts have a variable distance to represent the propitiate price movements. Question number 10. What are the 3 most important components in studying a chart? The answer is, price, volume, and time are the 3 most basic components of the market. Question number 11. What many traders do study mainly? The answer is, Many successful traders only study price action to make money. Question number 12. What has been growing lately in trading? The answer is, many traders use complex mathematical theories and faster computer technologies to analyze and participate in the market action. Question number 13. Where does success lies in the market? The answer is, in the traders who can study price action and make the decisions to pull the trigger at the right time with excellent discipline. Question number 14. What do I need to master to be successful? The answer is, market theories, market psychology and dynamics, money management methods, and to master your execution skills. Question number 15. Are the tools enough to success? The answer is, charts, patterns, indicators, and software are only basic market tools. Successful traders view them just as tools and understand the usage. They build a theory and trade with a solid money management plan. Now let's go to important definitions. Question number 16. What is opening price in stocks? The answer is, the opening price is the price at which a security first trades upon the opening of an exchange on a trading day. For example, the New York Stock Exchange, NYSE, opens at precisely 9:30 a.m. Eastern Time. The price of the first trade for any listed stock is its daily opening price. Question number 17. How is the bar chart plotted? The answer is, it's plotted as vertical line, represent high and lowest price within study period, called time frame, and one tick to the left called open price and one tick to the right called close price. Question number 18. What is an OHLC chart? The answer is, an OHLC chart is a type of bar chart that shows open, high, low, and closing prices for each period. OHLC charts are useful since they show the four major data points over a period, with the closing price being considered the most important by many traders. Question number 19. What is the open price? If we study the formation of a bar in 60 minutes, we call it 1 hour time frame. The open price is the price at the first second in 1 hour, which is plotted as left tick on the bar. Question number 20. What is the high price? The high price is the maximum price has been reached within 1 hour, which is plotted as vertical line. The top of it is the high price. Question number 21. What is the low price? The answer is, the low price is the maximum price has been reached within 1 hour, which is plotted as vertical line. The bottom of it is the low price. Question number 22. What is the close price? The close price is the last price at the last second in 1 hour, which is plotted as right tick on the bar. Question number 23. What does the relationship between the opening price left tick and the closing price right tick mean in a trading period? The answer is, if a daily bar has the close price lower than the open price, the investor's sentiment and the trader's psychology were bearish this day. And if a daily bar has the close price higher than the open price, the investor's sentiment and the trader's psychology were bearish this day. Now we go to question number 24. What are line charts based on? The answer is, line charts are based on closing prices, only charts and have a cleaner look. They do not have open, high and low values plotted and potentially eliminate the noise and truly represent the value of the current price and true investor sentiment. Question number 25. Can I draw line chart for open or close or high or low price? The answer is yes. Line charts can be plotted for highs, lows, and open or pivot prices, but are only plotted for a single value object series in the entire chart. Question number 26. Where is line chart usually plotted? The answer is, line charts are usually plotted when there is a comparison between two market instruments such as spread charts, comparison charts, and relative strength charts. Question number 27. How most indicators are plotted? The answer is, most indicators are plotted using line charts, namely RSI and stochastics. Question number 28. Who did invent and use candlestick charts and when? The answer is, candlestick charts were devised by Japanese rice traders in the 1600s. Question number 29. How candlestick charts are built? The answer is, candlestick charts are built on the open to close price relationships. Question number 30. What is the candle body? The answer is, the real body is represented by the range between open to close, and the color of the candle is black if the price closed below the opening price, and white if the price closed above the opening price. Question number 31. What does the wicks on both ends of candlestick represent? The answer is, the wicks on the both ends of candlestick represent the trading sentiment before settlement. Question number 32. How do traders use candlestick charts with other indicators? The answer is, traders use candlestick charts with other market indicators, such as moving averages, trend lines, and RSI, etc., to find the better opportunities. Question number 33. What is a point and figure PNF chart? The answer is a point and figure chart plots price movements for stocks, bonds, commodities, or futures without taking into consideration the passage of time. Now we go to question number 34. How is point and figure PNF chart plotted? The answer is PNF charts have X and O's representing ascent and descent of a fixed box. Each box size is preset and the price is represented only if the price trades above or below the previous box by that amount. Question 35. What does PNF easily visually display? The answer is the PNF method visually displays clear support and resistance levels. Trades are initiated from these levels on breakouts and breakdowns. Question number 36. Does PNF chart move in range? The answer is no. Charts do not move in congestion range. Hence, choppy trading can be avoided. Question 37. How can box size, how many points can be adjusted? The answer is box sizes can be a function of price range, average true range, or a fixed size based on the closing prices. Point number 38. Let's talk about history of Candlestick Chart. Japanese rice traders invented candlestick charting methods in the 1600s. Candlesticks show a visual representation of traders' emotions, whereas bar charts or Western charts emphasize a focused approach on closing prices. Candlestick charts have a real body open to close and shadows upper and lower, showing intra-bar price relations between the key price values. In candlestick charts, if a price closes higher than the open price, then the candlestick would be plotted green suggesting bullish. And if the price closes lower than the open, the candlestick would be red, suggesting a bearish condition. The market sentiment is measured by the real body length and its color. The bigger the real body, the bigger the sentiment, and the smaller the real body, the smaller the sentiment, which conveys indecision. Question number 39. Why candlestick chart is better than bar chart? The answer is candlestick charts offer a unique advantage over bar charts or line charts, since they offer an excellent visual representation of the relationships with prior candlestick bars. This indicates supply and demand, along with the support and resistance levels and possible trade decision opportunities for trend continuation or reversals. Now let's go to point number 40. Patterns and trading candlestick charts. Candlestick charts offer a simple way to show market movements and present outstanding trading opportunities. There are about 30 to 40 candlestick patterns, continuation and reversals, which are helpful in trading. However, these patterns need to be clearly understood and mastered for successful trading purposes. The theory behind candlestick charting method is not infallible. All patterns have clear confirmation theories and trading rules. The charts demand a full understanding of knowledge of pattern formations for successful trading. Question number 41. What are the most common candlestick patterns? The answer is, the most common candlestick patterns are doji pattern, hammer pattern, dark cloud, bullish engulfing pattern, gravestone doji, inverted hammer. Now let's go to point 42. Example of candlestick patterns. The chart above illustrates various candlestick patterns from the S&P 500 Futures 610 tick chart. Various candlestick patterns have been marked in the chart above and explained as follows. First, a doji pattern to suggest indecision in the period direction. Number 2. A dark cloud to signal a potential end of trend. Also, see hammer pattern prior to the dark cloud. Number 3. Another doji to signal indecision. Number 4. A piercing line followed by a strong trend reversal bar. Number 5. A bullish engulfing pattern to confirm a strong trend ahead. Number 6. A gravestone doji. Number 7. A doji bar to suggest an imminent trend reversal in the next few bars. Number 8. An inverted hammer at the top to signal the end of uptrend and strong downtrend to follow. Point number 43. 3 LPB charts. The 3 LPB charts plot price and ignore time and volume. How is this and why? The answer is 3-line price break. 3 LPB charts define the underlying trend and are considered as an adjunct to the candlestick charts. 3 LPB charts display a series of vertical boxes or candles that are based on price changes. The 3 LPB method entirely dispenses with the recording of the volume sales and time data on the x-axis. The other major charting techniques like point, figure, kagi, and Rinko charts also ignore the passage of time and volume. Question number 44. How to trade the 3 LPB technique? The 3 LPB are always constructed based on closing prices. A basic understanding of 3 LPB is when there are 3 white successive candles, the major trend is up, and when there are 3 successive black candles, the major trend is down. The major reversal signals, based on the 3 LPB technique, are given when the chiffed lines, white to black or black to white, are formed. After forming a confirmed trend of 3 white candles or 3 black candles, the reversal is only triggered if the current price is traded below the lowest of all period 3 candles in case of a bullish trend reversal, or if the current price is traded above the highest of all period 3 candles in case of the bearish reversal. Point 45. Example of 3 LPB. Thanks for watching, liking, and sharing this video. Subscribe to our channel
and press the bell button to get notifications of what's new on our channel, and follow us on social platforms.